next week onwards, we're stepping into a fresh new financial year. Give us a broad sense of what kind of nifty moves or broader markets move you're expecting to see when it comes to FY26, and this steep correction that we've seen in the last quarter or so, or FY25. Do you believe that that is positively behind us for good now, and FY26 is only, building on to the kind of reversal that we've seen from that sell-off over the last couple of weeks in trade?
Yeah, so thanks for having me. Good afternoon. So if we've seen the past few months, there have been significant selling that has happened in a lot of pockets, and the selling is quite pronounced in the broader market, the small and mid, as opposed to the large cap, though they have also corrected. So when we are looking at our portfolios at the moment, so the upsides that we see from each of our stocks in the portfolio looks significantly better than it was, let's say, a few months back. And, there are some news flows, especially the major one being tariffs and so on and so forth, which has impacted some part of the sectors. And, that is one of the major concerns across the globe, if you were to see it. But if you were to think about it, India, in a way, is relatively bit insulated. There could be certain pockets like auto and pharma, which could be impacted. But one of the major, issues that is happening across the globe, India seems to be relatively not so affected in that sense. So with that as a background, if you were to look at valuation at a current point in time, and especially if you look at the large cap liquid pocket where we kind of operate in, through our products. So there, what we see is, the valuations are nearly fair in most of the sectors, especially if you look at the financial space, which is kind of a large overweight. Things are much fine on the valuation parameters. But I wouldn't say that is true with small and mid, where the significant correction could, it can come. The other point is on the earnings trajectory. If you were to look at it, the past 2 quarters have been pretty bad in terms of, the earnings pickup, and there could be several one-offs, that had plagued the earnings in those particular quarters. But incrementally, we are expecting a gradual pickup that might happen. Now, earnings are not going to come in a hurry, but there would be a gradual pickup that we see. So, if you were to look at the large cap space, a combination of earnings growth and the valuation being relatively okay, I think one can expect reasonable returns going ahead in the large cap liquid part of the bucket.